The next 3 months could make or break your financial future. We are living through the biggest movement of wealth that will ever happen, and most people will miss it. However, those who know what's really going on with liquidity, the Treasury, the Fed, global markets, and how it all connects to XRP, Bitcoin, Ethereum, and all other digital assets will be sitting pretty while everyone else is still reading the news. It's not about if. This is already going on. It's going on now. And if you don't understand the forces at work, you'll just sit back and watch events happen instead of making money from it. This is not advice about money. This is the truth. Since July 16th, the government has been taking money out of the system to add money to the government general account. They've sold bonds worth almost $500 billion. About $500 billion was taken out of the economy in just a few months. There you have it. This is why risky assets like crypto, tech stocks, and high growth plays have been choppy and not breaking out the way they should. The important thing is that withdrawal stops. Now that the money has been added to the Treasury's account, the liquidity drain is over. When that stops and money starts to come back in, the game changes completely. This one macro variable sets a lot of things in order. Also, I need to tell you something important right now. Get ahead of the game by reading the XRP Millionaire Blueprint. It shows you how to use all of this to build wealth that will last for generations. It has documents, infographics, videos, and more that break everything down in a simple step-by-step way. It's made so that you can see how everything fits together and where the best chances are. The link is in the comment that has been saved below this video. Why wait? Now is the best time to go check it out. Let's go further now. At the moment, global cash is growing at a rate of about 8% per year. To that, you should add the usual rate of inflation, which is 3% per year. This means that your money is losing value by about 11% per year. Take a look at that. If you keep all of your money in cash, your future self will lose 11% of its value every year. Because of this, investors who actually make money take what seems like crazy long risks in tech, crypto, and assets with high exponential growth. To keep your cash safe isn't part of the game. The goal of the game is to beat the system that is meant to hurt savings. This is the exact reason Bitcoin was made. This is what all the big networks like XRP and Ethereum stand for. They help you get ahead of the debasement. It's even stronger because of this. The idea of liquidity is not just a thought. It explains 90% of what happens with Bitcoin's price. 95 to 96% of the NASDAQ's success can be explained by it. Take that in. 90% of crypto, 96% of tech stocks. All of this can be explained by one big force, cash. Everything else? Nothing but noise. Moves around on a graph. Headlines to take your attention away. Don't worry about going after every story if you get this one thing. Just go with the flow. Okay, what's going on now? Year over year, world liquidity has gone down a little since July. As expected, the markets did what they said they would do. They got slower. Okay, but that's just the setup. Since the bank general account has been refilled, there is no longer a need to keep taking money out. Now is the time to change. That means we've reached the point that Raoul Pal calls acceleration. At that point, liquidity isn't just growing, it's growing 10 to 15% a year faster, and risk assets go through the roof. You've seen this before. When money became available in 2013, Bitcoin went through the roof. In 2017, when the world was getting better and money was easy to get, Ethereum and XRP had their famous runs. With boost checks and no interest rates in 2021, the crypto market as a whole hit all-time highs. Every time the story is the same. Being liquid is like gasoline. Crypto is the way it works. And history is made when those two come together. This is where things get crazy. The NASDAQ has still been doing very well, even though volume has been a little lessening. Why? As a result of the AI and technology wave, tech stocks are attracting huge amounts of money from companies and investors around the world. But Bitcoin has been a little slow. It's been messy, smoothing out, and fixing. And this setup is the same as the last one, every single one. This dance is always done between Bitcoin and the NASDAQ. Put everything together, perform below par for a short time, then go higher and leave everyone else behind. Because of this, some crypto hedge funds are starting to think that they might as well just invest in tech stocks. Right then is when crypto again takes the lead. Check out the graph from 2022 to now. Bitcoin has always done better than the NASDAQ. That's what it does. That's what it does. It goes ahead. And every time it goes back to this 2 standard deviation line, it gets ready for the next big outperformance. We're back there now. This means that not only is Bitcoin about to take back the top spot, but all of the other coins, including XRP, are also ready to do even better. Take a look. For years, XRP has been stabilizing under a lot of pressure from legal clouds, one after the other. That cloud is no longer there. The tide is turning. A lot of institutions are coming in. Payment tracks are being built all over the world. And XRP doesn't just follow Bitcoin when small amounts of cash come back into crypto. It goes faster. It works in the real world and has a network effect. Because of this, you need to pay close attention now. Don't forget that this isn't about the next 3 days or even the next 3 weeks. You're already losing if you think about that. It's about setting up for the next 3 months and beyond, because the flow of money around the world is speeding up. That means the prices of all assets, including stocks, crypto, and everything else, will keep going up until something comes along and pulls that money back out. The road with the least amount of trouble is higher until then. The S&P 500 is going very much like it did during the tech boom in the 1990s. That stopped in 2001, but it made some of the biggest wins in history before it did. The story of AI today is like the story of the internet back then. It goes the same way. The way investors think is the same. Just like back then, those who didn't believe, who said it was over or that this time was different, were left with cash while everyone else got richer. What kind of person do you want to be? The one who sees the plan clearly and acts, or the one who wakes up 6 months later and says, I knew it, but I didn't do anything? You won't have to wait for the chance, that much is certain. If you are hesitant, liquidity doesn't care. It just flows, and those who are in the right place get rewarded. That brings us back to XRP. Even though Bitcoin is the market leader, XRP is in a unique situation to make huge gains when money flows back into altcoins. Its structure, its consolidation, and its connections all point to one thing: a huge rise in the acceleration phase. Here's where things get really interesting. Most buyers don't realize this, but stocks, crypto, bonds, and even real estate are all part of the market structure that comes after liquidity. The news isn't about wages or politics, and it's not even about short-term inflation. Those are just waves on the surface. The real tide is money. That changes the way you look at every report, every asset, every move up or down, and every correction. Take a look at it this way. If the amount of money that can move Bitcoin is 90% of what makes it move, then trading based on short-term stories is like surfing without watching the waves. Sometimes you'll get lucky, but the real power is when you join the swell. This is what the organizations do, which is why the rich always know before the rest of us do. Not stories, but flows are being tracked. The flows are telling us something very clear right now. There is no more drain on the budget. Soon there will be enough cash to cover all loans. The largest measure of liquidity, M2, is growing faster again. In the past, risk assets have gone up when that happened every single time. Crypto doesn't just move, it bursts because it is the most sensitive to a lack of cash. Take a look at what's going on with altcoins to get an idea. Ethereum has been right at the top of its range, going up and down, but not breaking. When Solana tried to break out, he was hit back, but he is still at levels that say accumulation. Even the ones with fewer layers, like SUI, have been strong. In that case, it's not weakness, but location. The market is coiling, ready for the floods to open. As soon as those flows come back, the cycle starts. When institutions start a play, they always take the least risk possible. That includes the likes of NASDAQ and mega cap tech, as well as Apple and Microsoft. That has already been happening, which is why, despite the drop in liquidity, the NASDAQ has done better than most assets this year. But once that first wave is over, the next ones will go to Bitcoin. From there, it spreads to other cryptocurrencies, with XRP typically being one of the biggest winners. Let's get a bigger look at the macro picture. Liquidity around the world isn't just about the US Treasury, it's also about banks all over the world. China has been opening up in secret. Japan is adding money to the system. Europe is once more becoming more dovish. Rate cuts are already being planned in the US. That's coordinated easing around the world. And coordinated global easing has always been the start of huge bull runs. Bitcoin's first parabolic rise began in 2013 with a rush of cash into Japan. When growth rates were in sync and interest rates were low in 2017, Ethereum and XRP took off. Coupled efforts to boost the economy and money made crypto the world's best performing asset class in 2021. Now we're in the same situation as before, but this time the scale is bigger, the adoption base is wider, and the cash pools are deeper. That's why Raoul Pal says crypto is the easiest big trade ever. Instead of focusing on dozens of different signs that don't agree with each other, you should only ask, is global liquidity rising or falling? You take a long risk when it goes up. You pull back when it falls. The rest is just small stuff. Now let's look at how Bitcoin and NASDAQ work together, as this is very important for knowing where we are. Bitcoin has reliably done better than the NASDAQ since 2022. After an uptrend, a correction, and then another move higher, it always goes back to a state of consolidation. We're back to that exact corrective setting right now, with Bitcoin underperforming a bit in the short term, but ready for its next surge compared to tech. The best part is now here. When Bitcoin takes back the lead, altcoins react with even bigger moves. Why? Since they have a higher beta, they have smaller market caps, less liquidity, and more energy that comes from stories. These traits change from flaws into strengths when money comes into the system. That's why XRP could go up by thousands of percent in just a few months in 2017. This is why altcoins like Avalanche and Solana had huge runs in 2021. Every time it has the same shape. Bitcoin is first, and then the money flows into other coins. That's where the gains get exponential. You may have noticed that a lot of buyers have given up on crypto lately. They say, the market has changed, it's dull, I'll trade tech stocks instead. It's not just hedge funds that are moving toward stocks. That's exactly the opposite warning that usually comes before the next crypto breakout. And the asymmetric upside is right there in plain sight when everyone else isn't interested and even experts start to question. Let's look at the DMARC signal's Raoul Pal tracks to back this up. It looks like the 9.13.9 pattern is flashing on his Bloomberg setting. For people who don't follow DMARC, that's a sign of technical tiredness that often means a turning point. It means that Bitcoin is about to do better than technology once more. And if Bitcoin is about to do better than expected, altcoins are getting ready for their own boom right after. Let's connect this to the bigger steps of the market. During the late 1990s tech boom, the S&P 500 looked a lot like it does now. The story about AI now serves the same purpose as the story about the internet back then. Both brought huge amounts of money into tech, made people feel good, and drew in investment from around the world like magnets. Even though bubbles always pop, the ride up is where people make a lot of money. The similarities are strong, and they suggest that this cycle will likely last longer than most people think. The Federal Reserve's upcoming rate cuts are another thing that is speeding things up. You can get more cash when rates go down. When there is more cash on hand, investments go up, and more cuts mean more fuel. When you add in the fact that the world is still making new money, you have all the ingredients for a liquidity-driven melt-up across risk assets. This is why ignoring liquidity is the same as ignoring gravity. You can only join forces with it. You can't fight it. Where does XRP fit in this picture? It's just right between macro and tiny. Like Bitcoin and the NASDAQ, it's linked to the flow of money on a larger scale. On the micro side, cross-border payments, institutional relationships, and clear regulations are some of the things that make it easier for people to use. That two-way advantage doesn't happen very often, which is why XRP has such huge runs when the stars align. One more thing. Since 2017 and even since 2021, the crypto market has grown up a lot. Back then, there wasn't much infrastructure in institutions. In the present day, we have ETFs, custody solutions, global regulatory systems that are taking shape, and banks and payment providers that are really using it. That means the amount of money that can come in this time is much bigger than anything we've seen before. It won't trickle when that cash comes in. It's going to flood. One more view to think about: flows of foreign wealth. It's very important for buyers outside of the US to find yield and growth right now. Many countries are stuck, making US tech and crypto stories based in the US look like the only ones that matter. That's why so much money from around the world is coming to the NASDAQ. But once Bitcoin takes back the top spot, those same flows will turn into crypto. XRP will be one of the biggest winners. Don't forget that markets are stories that are built on liquidity. The fuel comes from the cash. The stories are what light the fire. At this point, it's clear how liquidity is set up. AI for tech is what starts the story, plus payouts and use of XRP. When you put them together, the results are exponential. This is how the road plan for the future looks. The flow of liquidity stops, flows start to speed up again. NASDAQ keeps going up on AI strength. As more people buy and sell crypto, Bitcoin does better than the NASDAQ. And XRP does better than Bitcoin because altcoins are able to catch the higher beta flows. It sets off a chain reaction, and it's already moving. That's why you shouldn't pay attention to short-term noise. If you're worried about the next CPI number or Fed news story, you're not seeing the big picture. The forest is a place of flow. There's more growth in the trees. This is the part that most people don't think about enough, how the market thinks and feels. The flows are caused by liquidity, but how strongly investors put money into those flows depends on how people feel. And right now, we have a common situation where most people are cautious, busy, or skeptical, but the underlying liquidity conditions are shifting toward risky investments. That is why the upside possibility is not the same for both sides. You'll hear the same things from general buyers. Crypto is dull, tech is already stretched too thin, rates are still too high. But when you put those views on top of past liquidity cycles, you keep seeing the same pattern. People start to doubt when they're too busy chasing yesterday's winners or hiding their cash. That's when the setup for exponential upside is hidden in plain sight. After a very bad bear market in 2015, many people thought Bitcoin was dead. That's how it got from a few $100s to $20,000. Again, in 2019, investors were skeptical and thought crypto was not important. This set the stage for the cycle in 2020 to 2021, which sent Bitcoin to a high of $69,000 and dozens of other cryptocurrencies to all-time highs. In 2025, the same mentality is still going on. There is boredom, doubt, and distraction, and liquidity is about to speed up again. This is why you can't let how people feel affect your plan. You need to let liquidity set the rules for your system. As of now, liquidity says we're moving into the growth phase, and that means risky investments like crypto are ready to make big moves. Now let's look at XRP more closely because it has a unique structure in this cycle. Unlike Bitcoin, which is only a bet on macro liquidity, XRP is where basic adoption and liquidity flows meet. Since it is risky, it goes with the tide when it comes to liquidity. It has real use that keeps growing, especially in global payments and processing, which is why it is being adopted. Because it is in two different places, XRP doesn't just passively gain when capital flows return. Institutions already have a use case for it, so it actively helps them. Take a look at the relationships that Ripple has made around the world. Banks, payment processors, and money transfer services are already testing or using XRP to settle transactions between countries. That's not just a story, it's the foundation. When the world's money supply changes, that infrastructure attracts capital because it can grow and be used in the real world. Now put that together with how people think in the market. A lot of investors still think of XRP as the slow coin that has been stuck for years because of lawsuits. That cloud is no longer there, though. The long-running SEC case against XRP has been settled, giving the cryptocurrency more definition than any other at this size. That's a huge edge. This cycle starts with a green light for XRP, but other projects may face legal uncertainty. The market hasn't fully priced that in yet. That's why the setup works so well. Asymmetric upside happens when there is a change in liquidity, growth in usage, clarity in regulations, and investor skepticism all at the same time. Those are the moves that seem impossible at the time, but are easy to see if you're paying attention. Also, let's not forget the bigger picture. There have been new stars in crypto every cycle, but XRP has always been talked about because it is focused on institutions. It doesn't have to go up against every new game or DeFi project. It has a clear road, world payments. It will last because of that focus. And explosive runs happen when staying power is paired with liquidity tailwinds. Let's talk more about what Raoul Pal said, how easy it is to set up this script. Investors often make their plans too hard to understand. They look for a lot of different signs. They respond to all news stories. They are thrown around by short-term changes. The biggest moves, on the other hand, are almost always due to liquidity when you zoom out. That's why he says it's the simplest macro trade ever. You'll be in line with 90 to 95% of price changes in both crypto and stocks once you're in line with liquidity. If cash is going up, you shouldn't think too much. Your job is to put things in place. That's what this moment is all about. Getting in place before the flows come back full force, getting ready for Bitcoin to take back the lead, before altcoins, especially XRP, get the bigger beta gains, you should position yourself. The growth phase doesn't come with a big announcement. It shows up in the way prices move. Even though people are skeptical, Bitcoin keeps going up. Despite doubt, Ethereum is staying in its range. XRP is becoming more stable while its use grows. These are the signs. All of them are flashing now. Think about what will happen when the growth rate of world liquidity drops from 8% per year to 10 to 15% per year. That's trillions of dollars worth of money looking for a place. Some of it goes into stocks and some into bonds. But because crypto is the riskiest investment in the market, more and more of it will go into it. Also, a good chunk of crypto goes to assets like XRP, which can be used in real life as well as for speculation. The key is here. People in the market always forget how fast these changes happen. In less than a year in 2017, XRP went from being worth a few pennies to more than $3. In just a few months in 2021, Solana went from being worth less than $2 to being worth more than $200. The speed is unlike anything else when liquidity and story meet. That's why you shouldn't wait until it's clear. When the big news stories talk about it, most of the move has already been made. It's not clear to the crowd right now. If you're paying attention to liquidity, it's clear. That gives you an edge. That's why the next 3 months are so important. They mark the point where the liquidity drain stops and the growth phase starts. Forget that window and you'll forget where to put it. You can ride the wave if you catch it. That's the difference between being a bystander and being a part of the shift of wealth. Always keep in mind that markets go through stages. We already got the banana zone fixed in the first step. Not well done, irritating, and full of false starts. That's behind us. The next step is acceleration. When there is a lot of money flowing, prices are going up, and stories start to take hold. Then there is the mania phase, where even the doubters start to join in. The smart money is putting its money in now, before the craze. While most people are still bored or unsure, this leads to the question, where do you want to be? On the sidelines, since cash is losing value at a rate of 11% per year, or in assets that directly gain from that loss of value. History tells us the truth. During every cycle, people who positioned themselves early and linked with liquidity made huge gains. People who paused or had doubts arrived late. Things are the same in this circle. The sign is liquidity. Crypto is the way it works. The chance is in XRP. The window is open at the moment. You already know more than 99% of buyers if you've watched this far. You can see the ebb. The setup is taking shape. You see the simple things that other people make too hard. Now that you know that, the only thing left to ask is what you'll do with it. The next 3 months are not just another story. You can say that they set the stage for the rest of this cycle and maybe even your whole financial life. This includes liquidity, XRP, acceptance, cycles, and positioning. I made something for you that makes it easy to see how all of these things fit together. The XRP Millionaire Blueprint has papers, infographics, videos, and more that show you step-by-step how to act on what's coming. You can find the link right now in the message that has been pinned below this video.